All right, guys, in this videos, I'm going to explain to you a little bit about the question that you asked me about option plan. So first of all, as a disclaimer, I am not a financial advisor, and you should do your own diligence and research about which option do you play. But most important thing is I don't recommend newbie or anyone just jump into the stock to play option because it's very dangerous. You have to have the characteristic, you have to have the principle, the discipline, and also the experience to win an option. Because when it comes to option, you have to understand the game, you have to understand the rule. It's basically you play with the hedge fund. So, but in this videos, let me explain to you what is the option and how it's different from share. So let's say today I want to purchase the option of Nokia, right? So when I click on Nokia, you can see right here that if you want to buy share, you click buy right here. Buy share is basically you buy the share from the company. If the company Nokia going up, you profit. When it go down, you would lose money. And buy share, they have no expiration date. That means is if the stock crash, the stock collapse, the stock pull back, you don't have to worry because by the end of the day, great company will outperform again. It's going to go back up. So chill out, calm down, because it's eventually it's going to go up. The only time you lose money when you buy company is either the company went bankruptcy or you cut loss. You're like, oh, you are patient and you're just like, I want to take my money out and I'm willing to take this loss. That's the only time you lose money. But when you play option, it's very dangerous. Option, different from playing share or buy company, buy from share of company. It is option. They have expiration date, and option is like you predict if Nokia is going to go up in the next few months or in the next 1 year or not. It's depend on how many months you buy. If your prediction is accurate, like if you predict it's going up, you buy call. If you predict it's going down, you buy put. Simple as that. But if you can predict the Nokia, let's say it go up to like $7 in the next 6 months or a year, then you're going to win some money. You don't have to accurate predict the price go up exactly that amount, but if it's going up, chance are you will win the money according to your portfolio. But if it's going down, you will lose money. And sometimes if that particular option is go down by $1 or $2 or $3, and if it's near the expiration day, you can lose all your money possible. Okay. So let me give you a live demonstration of me buying Nokia option right now. I'm gonna click in here. So let's say I like Nokia. Click in here and I click on trade. Okay. And you click buy. That's when you buy share. You click trade option. That's when you buy option. If you don't see the button option right here, that's mean you have to go inside Robinhood and turn on the option section. Click right here. So you see right here, down, that's mean I predict the market go down, Nokia going down. In here, I predict it's going to go up. So right now, the price of Nokia is $3.96. That is the price per share. The price for option is going to be different. So I'm going to predict, let's say on my checklist, all right? Well, I have a checklist in here, if you guys could see right here. I write out a lot of options when the market pull back, because to me, when the market they pull back like this is a great opportunity for me, right? I'm not panicking. This is my opportunity to buy more option or buy more share of the company that I believe in. Okay, so Nokia is one of the company for the last few weeks. They have great news. They have great contract with AT&T, Microsoft. They have contract with Google, Amazon. So it just they bad luck. The market pull back right now. The short like squeeze them right now. That's why they're going down. But I think eventually great company will outperform and it's going to go up eventually. So when I buy option, the key in here is I don't really buy like for a month, 2 months, or 3 months. It's very risky because right now the market is like pulling back like quite often. And the market is very volatility. That's mean going up, going down, and no one can predict the market. And one of the best way for me personally to win is I want to allow time as long as possible for my leverage, right? So let's say for this Nokia, I put down is I want to buy a call going up right here. You see? And I'm looking for like, okay, I going to buy Nokia for, let's say 1 year. Okay, until you can buy like several options if you want to. You can buy for like Nokia until 2023, January 20, or you can buy January 21st, 2021 is up on you. No, I mean, January 21st, 2022 or 2023. It's all dependent on you. There's no right or wrong. The longer the time frame is the safety you are. It's like when you play stock, right? The longer you hold into the company, the less risk you will have. But at the same time, probably the less money you will win because it's less risk. So I'm gonna put in January the 21st. So I predict Nokia right now is $3 something. Within the next 1 year, it's going to climb back to, let's say, $7 or $10. So I'm gonna scroll all the way up here. See, right now, if you look on the right hand side, so the question you guys asked me is, Jimmy, how do you know which price to choose? Here's the thing. It's just depend on your prediction. Like if you look at Nokia, the last like 1 or 2 months, they climbed all the way to $10, right? All the way to $10. And right now it's the price like $3.90 something cent. So the chance is they can at least go $2 or $3 in the next 1 year. I mean, like then $7 is not hard for Nokia. So right now I'm gonna say, Nokia, they're gonna go to either $7 or $10. So if you are a safety person, you can click on $7. Okay, $7. You predict it's going to go to $7. The break-even price is like $7.25. Like if somehow Nokia by that day, January the 22nd, 2022, and they haven't reached like $7, then chance are you will lose the money, or it have to go above that $7 or $8 for you to break even. So the key of option is you have to buy very long, far away, and you have to make sure that you're going to sell the option when you get in a profit. Okay, so you have a year's time. So in here, I'm going to click on $10 because I really think that Nokia in the next 1 year possibly can go to $10. So the price right now is 16 cents. One of the reasons why you see is 16 cents for the option, because the higher the price that you choose, the lesser the cost. Why? Because it's harder for Nokia to go to $10, but it's easier for Nokia to go to $7. That's why you see the price higher. So for me, I'm just gonna buy additional Nokia for 16 cents right now. There's another call in. So let me see. I'm gonna buy just like 2 more shares. I bought a lot of shares in Nokia already. So I click right here, review, and I'm gonna swipe up. Okay. I buy a lot in Nokia. So right now I just buy like 2 more shares. So you can see this demo. I swipe up. Normally, when I buy one contract, that's mean 100 shares. So if you look right here again, let me show it to you again so you can see. January 22nd, I buy $10. When I click and you see right here, right now it's cost 16 cents per share. So if I put in one, it's equal to $16, but not 16 cents because one contract equal to 100 share. So anytime an option, they calculate by 100, like 100 share of the 16 cents. So earlier I buy like 2 contracts, is like $32, for example. Okay. So after you buy, you're going to go over here. You're going to see, like, okay, do they fulfill that order or not? You're going to see exactly. Nokia. You're going to see it right there. See? I just buy this one right here. And you're going to see, okay. They just fulfill my order right there. They fill my order. So you can go inside the option like of the company. When you click on the company, you would see like the option. Like I just buy more like at $7, but they haven't really complete my fulfill. What I mean by fulfill is every time you play an option order, you have to wait for the people who bid on it and buy the option. So normally if it's really popular and you have a longer time frame, more people would buy the option and it's going to fulfill. When it fulfills, it's going to say down here. Okay. So when I buy option, I don't really panic when I have like 1 year time frame. The only time I panic and worry is like when it's near the expiration day. It's like I buy for 1 month or 2 months or 3 months, and it's near the expiration of the day because I could lose all the money. But if I have like a year, and if like I buy, let's say $50,000 or $100,000, and I lose like 50% of that, I'm not too worried because I have 1 year's time frame for my stock to go up, for my option to go up. So that's the key, guy. So don't try to buy option for 1 month, 2 months, or 3 months. It's kind of really gambling unless you know what you're doing. But I highly recommend at least 1 year or even 2 years. Okay. So this is the purpose for this video. So hopefully it's helpful. If you have any question, type in below in the comment. Okay. So I hope you guys enjoy. So like I say, my top option is really like Nokia, SNDL, Neo, Riot, blockchain, and PLTA, which is Palantir technology. All right, guys. So good luck.